Hello guys, this is Robert here, coming at you again with another video. Y'all excuse my glasses. I got these, a friend gave me these glasses. I was stuck out and didn't have mine, and she gave me hers, and these suckers are good, okay? So, couldn't find mine right now, so I put these on. So, overlook these glasses. Anyway, this video is going to be something that's very interesting to you guys. I'm going to explain to you how we teach at Slow Life Trading, okay? The first thing that I want you to know is that I'm not some highfalutin guy that's superly educated, has a lot of big words and things of that nature. So it makes it easy for me to explain it to this market to you, because I put it down on the bottom shelf so everybody can reach it. So what this video is going to be about is dumbing it down so I can smarten you up, okay? Now, we trade, when we're doing our day trading, we do trade options, okay? And when you ask, well, what is an option? They tell you stuff like, an option, when you buy it, gives the buyer the right but not the obligation to buy said stock. You know, they just go on and on like that. When you hear that, here's what that means. There's two types of options, okay? There's a call option and there's a put option. If you buy a call option, pretty much what that means is you're taking a bet that you think the stock is going to go up, okay? Isn't that a whole lot easier to understand? And when you buy a put option, pretty much what that means is you're taking a bet that you think the stock is going to go down, okay? When you just playing directionally with puts and calls, okay? Now, if you on the other side of that, which means the person that bought the call, they're taking a bet that the stock is going to go up, right? Well, they're also, with an option, you can sell it to get in it first, okay? You don't have to buy it first. You can also sell it first. Well, if you sell it first, all you doing is saying that they think it's going to go to this price, but you saying that you don't think it's going to go to that price. So you just saying, okay, I'll take that bet. That's it. For instance, if you was betting on the Cowboys and the over and under number was, say, 40, and you bet it saying that you think it's going to go over 40, then that's a bet, saying you think it's going to go over 40. Well, you have to bet with somebody where the guy on the other side of that is saying, okay, I'll take that bet. I don't think it's going to go over 40. So if it goes up to 39 and a half, the guy that was betting for it to go over 40 loses. But the guy that took the bet saying that it was going to stay under 40, even though it got close, he still won. Okay? So that's all that is. Don't let it confuse you guys. It's just a bet. Okay? Now, on a long-term investment, we do what we call compound collars. And when I tell people about it, I tell them it's just putting insurance on the stock. Well, when you hear somebody on the market or on Wall Street talking about it, they say, well, I like to hedge my positions. All that's doing is buying a put on the stock that you own. If you buy Apple and it's at $130, you put a put on it at $130. Some people may go lower. You know, it just depends on where they want to stop their risk. But all it is insurance. You just putting insurance on the stock. That's it, okay? Don't overthink it. Here's another one. They say that, you know, I don't like to day trade because I'm afraid of the gamma risk. All they're saying on that is that they don't like to day trade because the stock can move too fast in the last day of the expiration, okay? Gamma is the rate at which the stock moves. That's all it is. Or your position move, the option move, or the price move. So don't let that get you all tripped up. Or they'll say something like, I would put this trade on, but I don't like the delta of it. I don't like the delta risk. All they're pretty much saying in that case is they don't like the probability of that trade risk, of the risk of that trade. The probability is probably not in their favor. The probability of them winning on it. Okay? That's all that is. Don't let it get tripped up on it. Or they'll say something like, I don't like these trades because I don't like the theta. The theta is not in my favor. All they're saying in that case is time decay is working against them, and they must have bought it, okay? Because if they would have sold it to open their position, they're saying that they like the fact that it's a losing value. It's an asset that loses value over time. All theta is the rate at which it loses value, okay? All these different little things and sayings that they have to try to get the common guy tripped up. All this is what I do to try to help get you untripped up, okay? But, you know, Wall Street uses all these different things. It's very confusing. When you look at an option chain, they have it where calls are going down, okay? And they'll show puts where it's going up. And it's the opposite. It's just made to get the common guy confused so he won't invest with his own money. Well, here at Slow Life Trading, guys, we turn the stock market pretty much upside down so you can understand it. We make it simple. We put it on the bottom shelf. We make it why it's not so hard, okay? It's when they say I'm a debit trader, all that means is they're buying when they go in the trade, okay, and they selling when they come out. If they say I'm a credit trader, all that means is that they're selling when they get in and they're buying when they get out, okay? Basically, when you're a seller, all you're doing is taking the other side of somebody else's trade. That's it. It's not complicated. And, you know, a lot of time they say, I'm going long on this trade. All that just means that they just bought it and wanted to go up. If they say, I'm shorting this trade, that means that they wanted to go down. It's it's such a trip how they do these things, okay? How they say these words and put these different sayings and phrases out there. And it's all just made to get you confused. And there's some more. But at Slow Life Trading, we'll help you break those down and put it into some words where even a child can understand it, okay? And so it'll make you not be afraid to risk your money. For instance, they tell you that credit spreads are very risky. Well, if you're doing $1,000 trade, $1,000 credit spread, okay? Yeah, you may be afraid to risk your 1,000, but are you afraid to risk 100? Well, in this case, you say, okay, when it gets to 100, I'm getting out of the trade. Well, that means that you couldn't lose no more than 100. You just get out at 100, okay? It's not complicated. You don't have to risk a whole 1,000. That's just what you have to put up, okay? But you're not really risking the whole 1,000. You only got to risk 100. So, you know, this is the kind of stuff that I have to get people programmed to the way that we trade here at Slow Life Trading. We make it simple, people. Some strategies are a little bit harder to explain than others, but once you really get it and get the base of it, which may take a little while, okay? And I don't tell you that it's gonna take overnight and you're gonna get it right away. And I don't tell you that you're gonna never lose. In fact, this is what I tell you. The trick to winning, the secret to winning, the sauce in winning, it's not in winning. Everybody can win. The secret to winning is learning how to lose. If you can learn how to lose and take a loss, you can win, okay? And especially here at Slow Life Trading, because we make it where you don't have to be right on the direction and you still can win. Okay, I take all of my years and knowledge of experience and I put it into this class so you can get it. And then I allow you to ask questions, even if they're dumb questions, or what you would call dumb questions, okay? Because there is no dumb question. You're trying to learn something that's totally new. I'm here in Mexico and trying to learn Spanish. And never before do I understand now when they say it's like trying to learn a new language, how difficult that is. When you're 50 plus years old, never knew another language, and now you're trying to learn another language, it's hard. Well, here's another deal. No matter what age you are, if you're younger, you're probably going to get it quicker, but no matter what age you are, it's going to be hard to learn these little things when it comes to the stock market, because it's not something that we was taught in the beginning. It's a whole new thing. It's like trying to learn a new language. But I'm here to teach you this new language. And you don't even have to learn all of them. You could take one, the compound collar, and it can change your life. Okay? Or you can take another one, the golden goose strategy. It can change your life. So, anyway, guys, I just wanted to tell you this. You don't have to be afraid, because I'm here for you. And I can teach you. And the way I teach you is that I take all the hard stuff and turn it into simple stuff. Anyway, that's all I have for you guys. Until the next time. Peace out. Keep it slow.